Bloomberg Audio Studios. Podcasts, radio, news.
The jobs report came out just moments ago, and it came in like this. 151, just a small downside surprise. We were looking for 160. Lots of numbers to talk about elsewhere. To do that right now, we can bring Mohamed El-Erian of Queen's College, Cambridge, into the programme. Mohamed, welcome to the programme, sir. Let's get to that jobs report. What's your interpretation of things?
I think you captured it well when you said, no big news here. The only one thing that I would be torturing is the labor force participation, but everything else came in as expected. And I think everybody's right in saying what's more important, what's ahead of us, not this report.
That said, Mohamed, we've been talking a lot about the momentum in the U.S. economy and the fact that it takes a long time to turn things around. Is there any part of this report that makes you concerned about the level of exceptionalism that we're coming off of into this period of uncertainty?
Not in this report, Lisa, but in a lot of other data there is. The edge of the U.S. has been predictability, has been transparency. And you're starting to see more and more business step back, not just on a short-term basis, but really think, how much longer do I need before I figure out what's my operating environment? And that builds on itself really quickly. So, the risk here is that below the economic exceptionalism, which is strong economic performance, strong asset price performance, has been this notion of the U.S. edge. And I worry that this edge is being eroded right now.
So, Mohamed, are you saying it's the death of U.S. exceptionalism?
I'm not. I'm saying it's under enormous pressure. We still have attributes that other countries, would dream of. So you don't kill U.S. economic exceptionalism, but you could put it on pause as people try to figure out what the operating environment is.
Mohamed, we're 5-6 weeks into a new administration. Has that much changed that quickly in such a short amount of time?
So I think there's been lots of changes. Just go to Germany and see what's happening there. Look at the debate there. It's been a Sputnik moment for Germany in terms of defense spending, infrastructure spending. John, all I can tell you is that all the consensus trades at the beginning of the year have been upended. Every single one of them. Currency, rates, relative U.S. equity performance to the rest of the world. I can go across the board. Every single consensus trade has been upended. And that tells you that there has been significant change.
Which raises a question about how much this is a trade and how much this is a fundamental shift that can actually get implemented in economic data that takes time. And Stephanie, I would ask you that. How long is the transmission mechanism for some of these things at a time when there are some fundamental policy shifts that will take time to implement, but it takes an even longer time to ripple through the underlying data and the underlying sense of strength?
Yeah, it should take a couple of months for us to start to see it reflect in the data. Of course, for example, today, the February data looked just fine. The March data are going to start to reflect this, and I would expect in the next 3 months we'll start to see the real impact. So, for example, the impact from tariffs, that takes about 3 to 6 months to work its way into the CPI data. So that's when we'd start to see that. The payrolls numbers we're going to start to see in the next couple of months because a lot of the job cuts are fairly immediate, and then you'll see the government contractors as a result, the fallout from that afterwards. So I would expect in 6 months' time we'll see a lot more of this truly reflected in the data, but we'll start to see it in the next couple of prints.
Kathy, from an investment perspective, and Mohamed was talking about how the policy shifts have been pretty dramatic and the market is trying to be a forward-looking prognosticator. How do you make bold moves? Do you just hide out in cash? Do you keep your allocations? I'm serious. It's sort of such a volatile time with sort of the reality checks coming out where there isn't that much news in the economic data.
Yeah, I don't think cash is the solution because, that it gives you some optionality. So building some liquidity, I think, is a good idea. And I think people undervalue liquidity in their asset allocation when things are good. And we've had this long stretch of everything's great. And who needs liquidity? Now I think you do need liquidity. But we are also keeping our benchmark duration right at benchmark. We're not extending yet. We hope to see an opportunity, but there's too much noise right now to take that risk. And then we're saying up in credit quality because you just don't have enough excess return there to justify taking a lot of credit risk. And we don't know what industries are really going to get hit. Some industries are going to suffer. And we do expect some spreads to widen as a result of that.
Europe's had a long stretch of everything's bad, and that's changed pretty quickly. Mohamed, to come to you on that, I remember in early November, shortly after the election, you said to us on this program, that sucking sound you hear is capital coming in from the rest of the world into the United States. That sucking sound we heard this week was capital going elsewhere. And we've heard that a lot throughout the year so far. Mohamed, what do you think about that reversal in flows that a lot of people have identified recently, and how sustainable do you think it is?
So that reversal makes sense given what has happened over the last few weeks. Is it sustainable? I don't know, John. The jury is still out as to whether Europe is going to be able to go from words to actions. It's not easy politically. It's not easy socially. They have governance issues. So I'm not sure that the reversal sucking sound, if you like, is going to continue for a while. But I understand why, because there's been a shock to a lot of the conventional wisdom on the U.S. and on Europe.
Mohamed, has there been an end to the sucking sound from the United States?
We'll see the data. I suspect you'll see that there's certainly fewer inflows coming into the U.S. But has it completely stopped? I really doubt it. The U.S. has some attributes that are very difficult to mess up. So the U.S. is still, whether you want to call it the cleanest dirty shirt or whatever, but it's simply not as clean for outsiders as it was a few weeks ago.
But Mohamed, where was everyone? The president was talking about these policies for months leading up to the election, and then talking about these policies for months between the election and inauguration. Everyone knew what his plan was. Why is everyone shocked?
Sequencing, Annmarie, and you talked about it earlier today. So we know the 5 areas in which he's going to move. 2 are unambiguously beneficial to the economy. 3 have good and bad to them. There's a journey issue in those 3. And the hope and the market expected that the sequencing wouldn't be what it is now. What you're getting now is, okay, we've got to go through the detox, we've got to go through the little disturbances, and then we will get the good. The market expected the good to come much earlier, therefore offsetting the bad. And that's not what has happened.
Stephanie, you're nodding your head away as Mohamed's speaking. You agree?
Absolutely. We were expecting tariffs to become a bigger thing for later in the year to tie to TCJA. They're coming much earlier. This has a legitimate impact on the economy. And by the way, the uncertainty is even greater than anyone had anticipated. So to the point earlier on CapEx being sort of stalled out here, it's hard to make any investments when you don't even know what the tax rates are going to be from a tariff perspective. And then they change day to day.
We're reacting to the payrolls report. Next week is the CPI number. That comes on the 12th on the Wednesday. Mohamed, I want to come to you just on a final question. Secretary Bessent yesterday at the Economic Club in New York said he'd like Team Transitory to get the band back together at the Federal Reserve and look through any inflation pop coming off the back of the tariffs. I just wonder how you feel about Team Transitory getting the band back together.
John, I'll go back to what Stephanie said. There is price pass-through from tariffs. Companies are much more agile in how they think about passing on prices than they were before. So I think, if Team Transitory gets back together, I wouldn't have them commit to too long a playlist.
It's a good way of putting it, Mohamed. We'll leave it there. Thank you, sir. Mohamed El-Erian of Queen's College, Cambridge, on the Federal Reserve, on the jobs data, and this market as well. And a special thanks to Stephanie Roth of Wolfe Research and Kathy Jones of Charles Schwab.